Good afternoon, everyone. Here's your afternoon review. Starting with the US dollar. Even after adjusting for seasonal factors, this round of Fed put expectations has been one of the strongest in recent years. Last Friday, New York Fed President Williams surprised the markets with a dovish tone, and also several officials repeated that message over the weekend. Rumors that Hassett could become the next Fed chair only strengthened the expectations of an easier policy. So markets now interpret this as closer coordination between the Treasury, the Fed, and also administration to push yields lower and create a looser financial conditions. Some even believe that Hassett could act as a shadow chairman at the December meeting to ensure rate cuts go through. Importantly, this shift has not been driven by weaker economic data, but it has been driven by the stock market. Policymakers appear worried about further downside risk during a low liquidity holiday period and also want to stabilize asset prices before the volatility picks up. So moving to WTI crude oil. OPEC Plus decided over the weekend to keep production unchanged through the first quarter of next year. At first glance, this looks like an acknowledgement of potential oversupply. 8 member countries that previously implement voluntary cuts are expected to maintain their output for now. And OPEC Plus repeated its usual message that global fundamentals remain healthy and also that low inventories reflect market strength. However, the market sees things differently. Many analysts believe that structural challenges are emerging, including uncertainties surrounding the Russia-Ukraine conflict and also the possibility of a peace deal that could bring more Russian crude and refined products back into the global market. This has also kept the oil prices under pressure despite OPEC Plus attempts to present a stable outlook. And finally, precious metals. Gold has dominated investor attention for nearly 2 years, but the recent surge in silver has forced funds to take a fresh look. Silver is rising on its own fundamentals, widening supply-demand gap, falling mine output, and also strong industrial demand. As gold prices reached record highs, many retail investors were priced out of the gold market and turned to silver as a more affordable alternative, continuing its historic role as precious metal. Although gold captured most headlines, silver has actually outperformed over a short period. If more gold investors begin rotating into silver, this shift in sentiment could fuel a self-reinforcing rally into next year. So that's all for today's review. Thank you for listening.